What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Man, once again, I've got to stop and say thank you, bro. I've got to tell y'all how much I appreciate you, man. Everything. Just being here, bro. Okay, I appreciate you being here. For real. All right. Now, listen, I can tell by some of the comments and messages I've been getting that some of you are getting a bit antsy, all right? You want to talk about strategies. You want to talk about entries and stuff like this, all right? I do too. So tonight, we're going to peel back the curtain a little bit. We're going to talk about entries. Now, listen, this is not trade advice. I'm not telling you what to do. It's not any sort of financial advice. Remember, these videos are for educational and entertainment purposes only. Okay, it's for your viewing pleasure. Okay, I've got to put that disclaimer out there. What I'm doing is I'm sharing with you something I'm passionate about. I'm sharing with you how I think. Okay, if I was going to trade the market, this is how I would trade the market. All right, somewhere along these lines, it's not all of it. It's not the entire thought process, right? Like I said, we're just gonna give you a little peek behind the curtain. All right, give you a little bit of the sauce. So I'm gonna tell you what this chart is showing you in the simplest way. Okay, you're looking at the weekly candles with no wicks. Okay, I have basically, I've painted the weekly candles on the chart with no wicks, and I've removed price action. I've removed candlesticks, okay? And I'm going to tell you why, okay? When candlestick charts were first invented by an old Japanese rice trader, there were no nefarious intentions, okay, behind this creation. This was someone who created this from their own thought process, and it was something that helped them. And I'm imagining it became so helpful to them that they shared it with their closest friends, who shared it with, people that they know who shared it, until eventually all of Tokyo is trading with candlestick charts. And eventually word gets out and these things spread like wildfire until it even reaches the other side of the world here in the West. And nowadays, almost every retail trader is using candlesticks. All right, there are traders who don't use candlesticks, right? They might use a line graph or a bar chart or something like that, but there are traders out there who don't even look at charts. All right, okay, you understand that? Now, even though when these things were first created, there were no bad intentions involved, it doesn't take very long for the powers that be to get their hands on something and twist it and turn it and flip it upside down and use it for whatever means they deem necessary, or whatever they see fit to do with this is what they're going to do, whatever is going to benefit them. Okay, no one in this market came here to play with you. Okay, if you wanted to play with somebody, you should have went to school today. You should have stayed in school, bro, because ain't nobody playing with you in these markets. Okay, you got to understand this. Now, it is of my opinion, in my opinion only, that somewhere around 80% of the candlesticks on your candlestick chart are useless when it comes to actually trading the market. All right? Now, don't get me wrong. Price action, candlestick charts, powerful stuff. We can certainly glean insights from candlestick charts as far as price is concerned, right? Where price has been, where it's at now, where it may even be potentially going in the future. All right, but this is a double-edged sword. And price action is the author of confusion for a lot of traders, okay? All I've done to this chart is remove the most complex part about it, the candlesticks, okay? That is what confuses traders. How many of us have put in a trade, a good trade, and then zoomed in on a lower time frame and got scared out of it, got shook and got scared out of the trade, only to see it go straight to our target shortly after, right? All of us. That's happened to everyone. How many of us have put in an order? Like, let's say you buy, only for the price to just drop through the floor right afterwards, right? And go against you. Or, you sell the market and then it's like magic, some voodoo, hoodoo, no offense to anyone who practices that, right? But it's like some magical thing. Price just immediately skyrockets and goes against you, That's happened to everybody, okay? And that's because most of the price action on your charts is being used, has been engineered purposefully and perfectly to manipulate traders into taking bad trades and manipulate them into getting out of good trades, okay? Most of the price action on your chart is being used against you, okay? To trick you and deceive you by design, all right? And I know that sounds real conspiratorial, all right? And I have been known to go down a rabbit hole or two in the past, okay? But it just is what it is. There's only a small percentage, about 20% of price action on your charts that actually is going to mean something to you, all right? When it comes to actually trading the market and making money, all right? There's only a little bit on the chart that I actually care about, okay? Now, you can see I've highlighted this range that is in between closes, or in between Monday's open and Friday's close. I've highlighted that region of price every week, all right? All the price action, just about all the price action that is inside of that yellow highlighted area, so inside the open and the close, or inside of the previous week's close and the current week's close, all of that is nonsense. You want to avoid it. Don't even look at it. Who cares? Leave it alone. All right? All of that there, that's what's going to get you mixed up. In there are trades perhaps, right? But they're 50-50 at best. So if you want to go and take 50-50 trades, you can do that. You know what I mean? You can do that if that's what you're into. But not me. I want to take trades where the odds are stacked in my favor. You understand what I'm saying? I don't want to take 50-50 trades. I want to trade things that are as close to a sure thing as they could possibly get. All right? And that's not saying I win every trade. I take losers. But the important thing about this that I'm going to show you is that this is going to offer you what Stacy Burke calls asymmetrical risk to reward opportunities, okay? Where you will have ideal trade entries with very tight stop losses where you will know immediately if you're wrong, okay? So you can shut it down quickly. If your psychology is on point, you can shut it down quickly for a small loss. But when you get it right, and you should get it right, eventually you should stop taking losing trades, right? And eventually, when you do get it right, it's going to erase all of the losers that you took. And then add some, all right? Okay, so if everything inside of these candles range is nonsense, where do you think the important stuff is? Okay, if you said outside of that range, you would be correct. Good job. Congratulations to you. All of your high probability trade setups are going to occur beyond the range that's highlighted here. So either above or below or around the previous week's closing price or high of the week, low of the week levels, all right? That's not saying that the close is going to be the high or the low of the week. That's not saying that. You'll see, we're about to get there. We're going to, throw some, I'm going to give you your precious candlesticks back so we can look at this, right? And I'm going to point some key things out to you, some things that we've already spoken about in previous videos as well, okay? So let's take a look. And, okay, so we're going to be looking at a 15-minute chart, all right? And because of that, we're going to only look at the last 5 weeks of price action, but we're going to start right there at the top, okay? So we're starting at week 5 and looking at week 6, 7, and I think maybe 8 is on the chart, all right? So that's what we're looking at, just those 3 or 4 weeks up there towards the top right of the chart, all right? All right, so here is the 15-minute chart. We're looking at weeks 5, 6, 7, and 8 from that chart that we were just looking at, right? And these are 15-minute candle. But now that we've switched it up, let's just call the week on the left, the first week on the left, let's just call that week 1, okay? And the second week that we're looking at right now is going to be week 2, all right? So I want you to see that week 1 gives a higher close, okay? Because of that, we know that any trader who went long at or below the previous week's close is holding on to a small profit by the close of the week on Friday. All right? And you can see some price action that reaches out and extends both underneath the previous week's closing price, and you can see where price has traded above the current week's closing price, all right? I want you to look at Thursday. So Thursday gives a high of the week formation. That is the high of the week on day 1, all right? Now let's look at the second week, all right? And the second week gives a lower close, so we know that any trader that shorted this market at or above the previous week's closing price is holding on to a substantial profit by the close on Friday, all right? Now, we went over some things in previous videos, right, about the higher time frame directional bias. For example, once we've formed a higher time frame directional bias and we decide we're bearish, for example, right, we can expect certain key things to occur over the course of the week if that bearish weekly template is going to play out. Meaning, if we are indeed going to get a lower close than the open on the week, we need to see certain things happen, all right? Certain things that we have recognized or learned to recognize with experience, all right? And what I mean is that there's only so much time in the day. There's only so much time in the week. So at a certain point, if we're going to get the move we're looking for, we actually need to see it start to happen, all right? And I've told you before that about 75% of the time in a bullish weekly template, we can expect the high of the week to be put in place in between Monday's Asian session and Wednesday's New York session, okay? And the opposite is true. Like if you're expecting a higher close on the week, right? Then we need to see the low of the week put in place between Monday's Asian session and Wednesday's New York session, okay? Because if price continues to fall into Thursday and late into Thursday, we might not get that higher close that we're expecting, all right? Because there's not that much time left to do it, all right? The end of the week is nearing, and we still haven't seen the things that we know we're expecting. Now, it could still on Friday just skyrocket, you know what I mean? And just go straight to the other side of the range in 4 hours. You know what I mean? That could happen. But for the most part, we're going to see it happen a different way, just like week 2 here. I want you to pay special attention to Tuesday and Wednesday, okay? If you look at this week, Monday trades lower. It gives a lower close. And then Tuesday opens. Tuesday gives a higher close, all right? Not only does Tuesday give a higher close, Tuesday closes in breakout. And what that means is that Tuesday traded higher than Monday's high of the day, and it stayed up higher than the previous high of the day level. It stayed up there all the way until closing time. All right? That means it closed in breakout. And that close in breakout is pushing back up into the previous week's high of week level on Thursday, right? And then Wednesday opens, and immediately in the Asian session trades higher, gives another higher high, so it breaks out. That triggers breakout traders into the market. We're trading back into the previous week's high of the week level again on last Thursday. And then price collapses, okay, and closes below closing price. If you need confirmation to trade, that is the confirmation, that close below closing price after triggering high of the day breakout traders. Okay, and I learned a little bit of that from Stacy Burke there, but mostly this is common sense stuff. Anyone can do this. So we talked about a little bit about this in that same higher time frame directional bias video, right? I dropped some gems in there. You have to go back and rewatch these videos because I sneak little things in there. So I snuck in that video. I told you, pay close attention to these areas where the market turns, okay? Because oftentimes when the market turns, it leaves behind a significant level, all right? Oftentimes it will leave behind equal highs and equal lows when it shifts from bullish to bearish or bearish to bullish, all right? Just like this example between week 1 and week 2. We get a high of the week on Thursday, and then Wednesday trades back into that high before dropping, right? And remember, I told you that most of the price action on your charts is nonsense, useless when it comes to trading, 50-50, all of that. But you might be looking at week 2 and saying to yourself, but look, I can see opportunities to get in, all right? And that's true. Even on Wednesday, when price falls below closing price, you can see in the New York session, it wicked back up above closing price. And you could have had an opportunity to either get in or add in to your position. And then again, on Thursday, we get a pull back into the New York session. You could have added in there. And again, on Friday, we get a pull back in the London session. You could have added in there, and you would have finished the week off really strong, right? there might be trade opportunities in there. And if you understand what I'm saying, you know that you use this same thought process, but on the day instead of on the week like I'm doing. You can do it on the day, and that will show you maybe more opportunities to trade like this outside of the range, right? So look at week 3. Week 3 here gives a higher close. So we know that any trader that went long at or below the previous week's closing price is holding on to a small profit by Friday's close. And again here, remember, 75% of the time in a bullish weekly template, we can expect price to give a low of the week formation somewhere between Monday's Asian session and Wednesday's New York session. All right. And look at what happens on this week. Monday immediately trades lower, right? And then goes higher than the close. But look at Tuesday. Tuesday goes up, breaks out of Monday's high of the day level before trading straight back to the other side of the range. So that's a false breakout on Tuesday. Okay, and that market closes in breakout to the downside. Okay, so we get that false breakout. Then price breaks out to the downside and closes there in breakout. And then Wednesday opens up. London trades back into that low of the day from the previous day, right? Before ultimately trading higher on the day and giving a higher close. And then the next day it dips back down below the closing price. So there's opportunities here to trade if you know what you're looking for. And these are what Stacy Burke would call asymmetrical risk to reward trades. You can see you could have a very tight stop loss, and that's because if you're wrong, you're going to know it immediately, because you are expecting that this is the low of the week. So if it starts to trade lower than that, then we're in trouble, right? It's not the low of the week. The low of the week hasn't been put in place yet, right? So we jumped the gun. We're maybe a little bit early, or it's just not going to work out. Okay, and the next week also gives a higher close, and look at what happens on that week. Tuesday puts in the low of the week. Wednesday follows through with that. All right. And it's not any sort of rocket science. Don't try to overcomplicate it, okay? And if we reference the previous video that I made, even here at the close of week 4, we still have traders potentially short from week 2 who are still in the profit. Traders who shorted it from the top, right? They're still in the profit. They have not been revisited yet, all right? So, but anybody who had a trailing stop or anyone who got in later in the week, if they never took their profits, they've been stopped out by now, right? Or they're in some serious pain and just holding on for dear life, okay? But look at the type of price action that you see inside of the weeks. A lot of the times it's this crazy, choppy stuff, and that is the stuff that's going to chop you up. That's the stuff that's meant to confuse you and throw you off the trail. You understand what I'm saying? Now, this is where we're looking at some entries, and we're talking about some entries, bro, like really nice trades, the only kind of trades that I'm interested in taking. Notice week 2, how it trades from the high of the week almost straight down to the low of the week. This is also true for week 3. On Wednesday, where does that ultimately skyrocket up to? Back into it might not make it all the way there, but it trades all the way back into the high that was put in place on Tuesday. So it goes all the way from the low of the week all the way back up to the high of the week. Okay, and then on week 4, Tuesday puts in that low of the week, and then we get a pullback going into the Asian session on Wednesday, and then price goes straight, skyrockets up, okay, to the new high of the week level. So still, again, these are from one side of the range to the other side of the range, if you catch them right. You know what I mean? And you might not catch them every week. That's why we're not watching one single instrument. Okay, we have a diverse basket of instrument that fits our local time zone and our lifestyle, and we watch We hunt, we search through them all. If you don't see an easy trade this week on your favorite pair, go to your next one, then go to the next one, and go to the next one. But it's going to be there. Every week you can catch a nice, easy, low-stress trade. This shit can actually become fun for you at some point, maybe. You know what I mean? But yeah, anyway, man, I hope that this helps somebody out there. That's all I can ever ask for. And again, I appreciate every single last one of you, man. Until next time, I hope you continue to free your mind.